Well, folks, stocks are soaring today. Up big, I think almost 600 points. I didn't see the close. That's after yesterday's drop. Buy the dip. We were talking buy the dip yesterday. We got it right one time in a row. Joining us now, help make us some more dough, the great Charles Payne, host of Making Money with Charles Payne right here on Fox Business. You know, Charles, I mean, it was easy to say buy the dip, but actually big profits, free money, rock bottom interest rates. I still don't see what fundamentally is wrong with this picture.
Yeah, of a consumer with the best household balance sheets ever, $2 trillion in savings, more money coming. Listen, buy the dip. It has been easy if you consider this strategy has been so effective since March of 2009. I heard you and Art talking about how short the NBER thought the recession was. Well, we had an even shorter bear market. So yeah, people know. And the interesting thing to me, Larry, is the individual investor knows this better than Wall Street. They're the ones out there, hashtag buying a dip, making more money than they ever made before. And they're going to keep doing it until it doesn't work.
I think the individual investor, the so-called retail investor, Charles, has more horse sense and a better track record than some of the wealthiest hedge fund people that I know.
And they also do investing 101, right? They're not trying to game the market. They're not flipping from value to growth. They find a few ideas that they like. They buy them. They buy them when they go on dips. You can argue whether you think those ideas are good or not, but guess what? Their track record since last year is crushing. I mean, crushing of Wall Street overall, and I tip my hat to them.
Now, Charles, I don't know. I'm hoping you can see the screen. We're going to put up two charts real quick. I want to make a point.
Okay.
I started this morning with my great friend Stu Varney. Everybody talks about inflation. Inflation is a monetary phenomenon. It's monetary driven, okay? So there's a couple things I want to say. Number one, after soaring, the growth of M2 is now coming way down, Charles. In the winter, it was rising 27% year on year. Through May, it's down to 14%, still high. I think when we get the June results, it's going to be about 7 or 8%. I just want to note that the Fed is not as loose. And the monetary base, which is essentially the Fed's balance sheet, you see exactly the same story. After soaring during the winter, this is part of the relief effort, 58% growth in February. It's now coming way down, 17% in May. I think it'll hit single digits in June. And, Charles, one last point here, and I'll let you comment on this, because nobody wants to talk about old-fashioned monetary issues, which really drive inflation, not transfer payments and entitlements and stuff like that. The Fed is taking money out, Charles, every day through these so-called reverse RPs, okay? They're draining $800 billion of high-powered cash out of the banking system, which is flush with cash. So it's like a guilt trip. There's a silent tightening going on, which I think is holding up King Dollar and dampening down inflationary break-evens. So the monetary story, I don't know, not as easy as some might think.
You know, I agree. By the way, I've used that chart and I've talked about that, the growth of M2 over the last several months. So I'm with you there. This reverse repo program is really intriguing to me, though. To me, it points to banks just having so much extra cash, not knowing what to do with it, and the Fed taking it off their hands, paying, and keeping it that way. To your point, there's so much money sloshing around out there. They really don't know where to put the excess money. We've got over $2 trillion in household savings. Again, these balance sheets are wonderful. So I'm with you on all of that. I will say, though, here's the thing. I don't think any of this is going to deter the Federal Reserve, though, as we both have talked about. They seem to have more mandates other than inflation and full employment. And I think no matter what it takes to keep pumping the pump, the priming the pump, they'll do it, even if it's reverse repo programs where they take in $8-9 billion a night, which is a lot of money.
It is a lot of money. I think it's a guilt trip because they know they were too easy on the balance sheet. Anyway, we'll talk some more. Charles Payne. Now, folks, be sure to catch his special show, Proud American.
Hey, Sean Hannity here. Hey, click here to subscribe to Fox News YouTube page and catch our hottest interviews and most compelling analysis. You will not get it anywhere else.